Let me press the recording button. Once again, I want to welcome everyone to today's webinar, Store Financial. And my name is Doug Seaberg. I'm the Director of Business Development here at Store Financial. And we're an electronic payments firm based in Kansas City and Overland Park. And today I'd like to educate and share some information from a few sources that I'll cite here in just a minute, but the title of our webinar is the top five priorities for B2B payments in 2016. A couple of the sites and resources that I'll share with you come from Ardent Partners. They're a supply management expert firm, and we get reports and a lot of great material from them. They have a great article that's out recently called The State of B2B Payments and the Emerging Business Value of B2B Payments. The purpose of the webinar, again, is to share our perspective on these priorities and give you some feedback on some stories and some experience that we've had, share some information from the reports. I'll also read some snippets from an HFMA educational report around payments, and then I'll share some examples and some stories on our experience with our own buyer partners. So regarding e-payments and why we feel that Store Financial, an electronic payments company, why we feel we're qualified to speak on this topic, and I want to cover some challenges of a paper-based system as it pertains to priorities for B2B payments. And I'd like to start just by reading a section from this Ardent report. Business operations have become increasingly data-driven in recent years, with executive leaders asking for quantifiable data from business units that in prior eras ran with little to no involvement from the C-suite. AP is no different in this regard, and in fact, the typical department's priorities have shifted in response to this new interest in data. I'd like to play a section from our YouTube page and give you a little bit more background on how supplier payments could work for you and your company, and then we'll dive into these top 5 priorities. I could not have stated that any better myself, and hopefully that video came through clean on your end. And again, if not, I'll provide you with a copy of this deck, and you can sure watch that video once you've had an opportunity to go to YouTube directly. Okay, so what are these top 5 priorities for B2B payments this year? The number 1 priority, the largest priority at 39%, and again, let's start from the bottom and work our way up. Number 1 priority is to improve reporting and analytics around accounts payable. And the reporting and the analytics, as you think about all of the folks that are involved in the finance function of a corporation or any company for that matter, there's a lot of individuals with a lot of interest in the data. I'd like to again quote this section within the Ardent report. When it comes to invoice payments, the top priorities in AP today center on improving reporting analytics at 39%, and gaining better visibility into invoice and payment data at 25%, both of which can provide key advantages to accounts payable. The reduction of processing costs at 36% remains near the top of the B2B payment agenda, and a stark reminder of the high cost of manual paper-based strategies. This priority links to the focus on improving supplier connectivity at 27%, since automated transactions and communication have been shown to be lower cost than legacy offline approaches. Well, let's dive into these 5 areas and start with improving reporting and analytics around accounts payable. So if you have a paper-based accounts payable process today, you have a lot of issues around delivering your checks that involve many issues that are beyond cost. Hard costs, soft costs, true business costs, postage, human intervention. And when you think about delivering a paper-based payment, you can think of the benefits of improving your reporting and analytics if you added an electronic payment or an e-payment strategy to your process. And a virtual payment or a virtual card, an electronic payment, offers your suppliers a more efficient way to track and control payments. So what you're looking at here is an example of what your supplier would see when they would receive a payment from you in the form of a virtual card. So your information that the payment is coming from is listed on the top. Sample company could be any buyer organization, a reference number which would allow for reconciliation, the card number, the payment amount, everything that a vendor would need to process a payment. The great thing about an electronic method is all of the remittance data that your accounts receivable vendor would need to verify within their system is included in the payment. Another great benefit of having payments delivered electronically is the payment history, which you can see on the top left section of this page. All of the payments within the electronic payments that would come, for example, from Store Financial on your behalf to this vendor, the vendor would be able to go in and see all of their payments, all of their account activity. They would be able to adjust any of their information within their profile. It just makes for a very, very rich improvement in reporting and analytics. The great thing that the accounts payable team gets is, unlike a check where other than once the check clears and all of the reconciliation reports that you have to do, that's very resource intensive, is eliminated, and you get very rich reconciliation information delivered right back to you for your accounts payable team. So that's the very first priority as we look at that number one, the issue to improve reporting and analytics around accounts payable. The next one on the list is to reduce processing costs. If you think about the amount of costs for check, for example, let's do a real quick exercise in math. So let's look at a company that makes 100,000 annual payments, and let's say that 70% of those payments are sent via check. And the average cost of the check, when you add up hard costs, business costs, postage, human intervention, let's just say that average cost is $7.87. Those payments to pay within that method cost $550,900. If you looked at converting a portion of those payments to an electronic payment method, if you just converted 30%, you would look at an annual savings of $165,000. 40% gives you $220,000, 50% gives you $275,000. The challenges of a paper-based system, and this comes from an educational report from HFMA, to go through several of these areas around these hard and soft costs. A paper-based AP system requires significant labor to print, stuff, and mail checks in addition to considerable supply and mailing costs. And to quote one of their examples, in quote, our organization issued more than 1.4 million checks in 2013, which cost us over $500,000 in postage alone. Also notable are business costs, locating, storing. When an error occurs, such as data incorrectly entered in the system, it can be time consuming to get physical documents back so you can correct mistakes. Also, storing invoices within old school filing cabinets takes up space that can be used for more productive purposes. And then as we think of postage, there's several issues that come around as it's related to postal delivery. Should a paper check get lost or delayed during mailing, you may need to stop a payment, issue a new one, which delays payment to the vendor and adds costs. Waylaid checks require resources to resolve and can delay payment to a vendor. And then in addition to the costs and risks, there's the time and the resources needed to fully reconcile checks that are cleared on the back end. So you've got those that include generating detailed reconciliation reports. This can be a resource intensive effort, especially if staff have to track down misplaced or uncashed checks. Payments made electronically can provide businesses with detailed remittance data, thereby helping to reduce time lost to payment disputes and reconciliation. The business also has greater control over when payments are received by vendors. And in the end, a paper-based process requires a great deal of human intervention, which opens up significantly to the risk of error. So if you look at your own payment mix within your firm, I'd like you to consider the following. What does it mean to have a fully optimized payment mix? And if you think about what type of accounts payable file you might have, I'd like you to think of what your eligible spend would look like. So the ineligible spend, of course, would be taxes and payments to the government, payroll to your team, and that leaves you with that bottom section there on the left, which is your supplier spend. Within your supplier spend and your eligible spend, I want you to think about different segments and really split things up into 3 different categories. Who are your strategic vendors? And a good way to think about a strategic vendor is you need them as much as they need you. The next section would be who are your core suppliers or perhaps your preferred suppliers. And then your bottom section there are your non-strategic suppliers. They need you significantly more than you need them. Their product or service is readily available from many, many different providers. Real quick example we like to use is if you think about segmenting your vendors, I'd like you to think about Chipotle. If you're corporate Chipotle and you're in the procurement team and you're looking at your suppliers, who would some of Chipotle's strategic suppliers be? I love Chipotle, and a couple of the things that I love at Chipotle are I love the chicken and I love the shredded pork. Well, of course, their beef and their chorizo is pretty excellent too. But if you think about the strategic suppliers to Chipotle, those would be some examples. So your meat and your vegetable, your rice, your large purchases that Chipotle would do. Next down the line would be some core suppliers or some preferred suppliers. For Chipotle, this could be items like plastic forks, napkins, those little baskets that they give you your burrito in. The non-strategic suppliers could be anything from the person that cleans the carpet, if the uniforms need cleaning, the HVAC repair, if you need light bulbs replaced. Those are all individuals that would fall into that non-strategic category. And if you look at optimizing your payment mix, think of converting those manual hard cost processes like a check to more of that electronic B2B payment mix. Think of getting your mix to 60% ACH and wire, virtual card at 30%, and eliminating those check payments to 5% or less, and that commercial P card to 5% or less. So I'd encourage all of you to consider and look at what percent of your eligible spend is your organization converted into an e-payment strategy. If your numbers don't look like this, I'd love to talk to you and look at ways that we might be able to help. The next item within the top 5 priorities for B2B payments would be to improve supplier connectivity. As I've talked to different buying organizations that have gone through recent challenges over the years, one of them has been a struggle with keeping a large AP team. And because buyers have downsized their AP teams, you're looking at a significant cost to add FTE in order to improve that connectivity, which would mean conversations with vendors. One of the recommendations or one of the examples that we would provide, or any third-party processor should be able to provide for you, is a portal at which your suppliers or your providers, your vendors can log into in order to enroll themselves in taking electronic payments as part of their payment, And the use of technology and the use of a third-party processor would provide significant lift to an already stretched accounts payable team. So one of the main benefits of having a technology firm and having a third-party processor is to really give you additional leverage for your team in order to maximize that optimization in conversion to an electronic method. As you look at the visibility into payment data, I'd like you to think of what it would take for you to analyze a report within your system and look at segmenting your suppliers. One of the things that a third-party processor, and Store Financial is one, that really provides an aha moment for many procurement, treasury, or finance and accounting teams, is improving that visibility into what the data looks like behind the scenes. So if you look at pulling a list of your vendors and in your payments, I'd consider asking what that segmentation looks like. Have you considered perhaps segmenting your suppliers by quartile and breaking down the number of suppliers, the amount of spend by each quarter of the fiscal year? You could perhaps even break it down on a month-by-month basis or look at trends perhaps to see exactly how strategic or non-strategic that supplier might be. Have you looked at the suppliers that are matched up and currently take card as a form of payment, but you're paying them with a paper-based product, but they take card as payment? So they take card, but they're not taking card from you because that's not how they're enrolled. Unmatched suppliers would be suppliers who don't currently have a match with card. It's not to say that they don't take card. They may or may not have the technology to take card, which a third-party processor could help you enroll your vendor to take card as payment. And then a payment analysis, give you an overview of how many suppliers are paid by which payment method, give you a really robust information around your top 10 suppliers by spend. And if you think of, okay, how do I get all this information out of my system? I may be using a ERP that doesn't give me a lot of rich remittance reporting. That's where a third-party processor, that's where someone can come in and really help you. So think of it as easy as generating an Excel spreadsheet or exporting out of your system and then simply sending that to a provider for analysis. Feel free to get a mutual NDA signed so you're sharing some very sensitive information, but you will be amazed at the amount of insight that this would give you and what a company such as ours could assist in giving you that visibility into your payment data. The next on the list was extending payment terms and optimizing your days payable outstanding. And this comes from one of the charts within the Ardent report. 1/4 of all accounts payable teams have prioritized extending payment terms and optimizing their days payable outstanding. Nearly 50%, as you see that pie chart on the left, nearly 50%, or in this case 47%, had payment terms at 30 to 45 days. 25% had payment terms 46 to 60 days. 61 to 90 represented 6%, and then 3% were more than 90 days. Where the opportunity would lie would be within that less than 30-day section. So think of extending payment terms, maybe for greater than 30 days, and perhaps adding an option to your payment method. And this combination of those two things, increasing term, adding payment electronically, such as virtual card, to your mix, could really add significant revenue to your finance team. One of the funny things that stood out on this for me was 3% of the folks that were surveyed regarding this couldn't measure their payment terms. I found that quite interesting. So there's a little bonus here. I mentioned, the title of our presentation here were the top 5 priorities for B2B payments, and there was actually 6 in that original list, if you'd notice, and I kind of considered this one a bonus. And it just so happens that increasing card rebate would be maybe a little bonus, 5 plus 1, could you say? And as we looked at the key to increasing card rebates would be a couple of different things. The first one, though, is increased supplier onboarding. So what does that mean? If your accounts payable team has been restructured or downsized, if you add some horsepower by a third-party processor and actually have the supplier onboarding to take card as payment, you could significantly add horsepower and revenue for you and your finance team. And for example, let's just take a look at if you were to convert, and let's say you had $10 million in available spend, and you were able to convert 30% of that $10 million to card as payment, you're looking at nearly $55,000 in rebate for your organization by simply having your payment file executed by a third-party processor, having the payments made by that third-party processor, and your firm would look at generating that additional amount of revenue. If you're generating 40%, you're at $70,000. If you're generating 50% of your $10 million, so you're generating $5 million in supplier payments on card, you're at nearly $90,000 in annual rebate. A couple things to consider as a supplier. If I'm going to take card as payment and I have a relationship that's been established by a third party, and I know I'm being looked at as an important vendor to my buyer, one of the pushbacks that we quite often will hear around, I don't want to give up my banking information to take ACH, especially if I'm a non-preferred vendor, is to take card as payment. Your supplier doesn't need to provide banking information. They simply provide an email address to send for a card to be emailed to them. The buying organization on the flip side, if you're the one sending the payment out, you no longer need to house their sensitive banking information, which you would have to if you were to pay an ACH, and be at risk for a security breach. Store Financial as an electronic payments firm has the ability to help with ACH payments. We would house all of that sensitive banking information on our encrypted PCI compliant server, and also we would be able to help you execute payments via card to your vendors as well. So there's some information on card rebate. Last, as we go here towards the section on, as we talk about improving some visibility behind the data and who does what, I'd like you to think about all the different things that may be lacking within your finance or accounting team right now, just because of lack of FTE or lack of electronic methods. Maybe things are or more paper-based than you would like. A third-party processor should provide all the value-added services as part of this optimization program. First and foremost, again, is supplier enrollment, and it's using that third party as your bridge between your accounts payable team and your finance team and your accounts receivable team at your vendor. And if we start at the number one and kind of work our way clockwise around this third-party processor, they should do all of these things. They should provide the initial enrollment campaign to enroll your vendors electronically. They should do all of the payment delivery on your behalf. They should help with payment reconciliation back to you as the buying organization. They should provide ongoing supplier support. If I were to have one item within this list that stands out among them all, it would be parts 1 and really parts number 4. So let's say you're paying vendor with ACH and that vendor changes their bank. If you had a third-party processor, you'd have the availability to have ongoing supplier support, keeping that ACH file up to date. As vendors come and as vendors go, you want to have ongoing supplier support and 24/7 customer service in multiple languages to help add horsepower to your AP team. You should have the availability for your suppliers to log in and look at payment portals, to look at their payment history. You should have a firm to help you with escheatment and 1099 filings and compliance. Huge emphasis on compliance. Look at your current partnerships and look at ways that you could add a third party to really give you that horsepower that you might need and all the different things that you would be able to receive by adding an additional payment partner to your team. As you look forward in the next 24 months, the interesting thing that stood out, this was one of the charts within the B2B payments for the next couple of years. One of the things that really stood out for me, and again, this is looking out 2 years in prioritization, what are some large expected changes in accounts payable? So if you look at the bottom, 2 years out, expected changes is the amount of paper will significantly reduce, and that was an 88%. It led the way. AP staff moving away from manual tasks at 86%. AP processes will be largely automated at 82%. And then the last three I found very, very interesting is adding the ability for AP or making sure AP absolutely is key in that group to capturing more early payment discounts. If it's a manual process and if it's having multiple parties manually approve an invoice or doing a check run, think of the amount of early pay discounts you may be missing out on because the process is manual today. AP could play a key role in supply chain finance initiatives where you look at optimizing your days payable outstanding and optimizing cash management and working payable. Think of those situations where you may be able to move payment terms out, pay with a card, or consider as you look at supply chain finance initiatives, and this is something that our firm could help you with, absolutely. If you think of supply chain finance, or in some cases it's referred to as buyer financing, where invoices are paid at the point of approval rather than delayed payment to the end of the payment term. So let's say, for example, payment terms with a vendor are 90 days. However, you're making the payment when the invoice is approved and the buyer financing is set up. So you're taking advantage of an early pay discount, and then you would pay the supply chain finance company at the end of that payment term. So if you'd like some more information on how that works, I'd be glad to have a discussion with you. So as we think of where things are headed, as we look at where things are, as viewing your suppliers as business partners, your suppliers are more than just providers for goods or services. So instead of a cost to your AP department, they can be leveraged as important assets to help grow your bottom line. By viewing your suppliers as business partners, you can absolutely increase visibility into payment data. You can absolutely help decrease your operating costs by lowering manual check costs and increasing things like early payment discount. You could think of increasing card rebate. Absolutely look at that, both sides of that coin, lowering both hard and soft costs and increasing items like early pay discounts and card rebate. Look at gaining some insight into your own payment data. Really take a hard look at your supplier payments from last year. And if you'd like some help with a segmentation, we'd be glad to help you with that. We do that all the time for our prospects and anyone that's considering putting something like this together. Absolutely look at sending that information to us. We'd be glad to help you gain some insight into what your data is telling you. Again, look at new source of revenue. Just covered that a second ago. And then look at the improvement in your supplier satisfaction. You know, as you think of your suppliers as business partners, think of all of the different ways that these electronic methods can help with them by improving the communication between the buyer team and their team. As we wrap things up and as we look at Store Financial as a payments firm, we really get excited by helping our customers achieve their goals. We really get excited with helping take complex methods and complex situations and making them simpler for both consumers and for businesses. And I think I'd like to wrap by just playing this short video and giving you some insight on why we do what we do. All right, I got some feedback just a minute ago. I was looking through some of the attendee questions and noticed the video was choppy or didn't have sound. I'm going to be sending the presentation deck out here as soon as we're finished, and feel free to watch those videos. They're very important to us, and we really think they're very well done in telling the story of why we do what we do. I don't see any questions posed by anyone, and I would be glad to take any feedback from you if you'd like, and then send this out to all of you shortly as soon as we get it downloaded within the next day or two. So that being said, thank you for the webinar. I absolutely hope you found it was educational. Feel free to share this with your finance team, and I look forward to speaking with you and hope everyone has a great day.